Today, I'm going to be covering Realty Income Corporation and why I chose to add it to my portfolio. Realty Income Corporation is a fairly popular company among dividend investors. It's also known as the monthly dividend company. It trades under the stock ticker of just the letter O. Um, Realty Income Corporation is a REIT or a real estate investment trust, which provides it with special tax treatment, which can be beneficial for investors. It is treated just differently, though. I won't get into super into detail here as far as REITs go, and I'll leave that for another video. But there are some interesting tax considerations just to consider if you do invest in a REIT like Realty Income. Realty Income Corporation owns and leases commercial properties, primarily in the retail space, with top tenants such as 7-Eleven and Dollar General. The tenant base is pretty diverse. So I went and pulled their most recent 10Q, and you can see just the tenant base. It will show the number of leases, the total percentage of its annualized rent, but the largest tenant that Realty Income Corporation has is 7-Eleven at 3.4% of its just annualized base rents as of the end of March. And then we have like Dollar General at 3.3%. Pretty well diversified though, with one tenant, no one tenant being over 3.4% of their analyzed rent. I feel like personally that's pretty safe because even if 7-Eleven or Dollar General had some issues, it's not going to completely just destroy the portfolio. They're pretty well diversified, and it gives them time to be able to try and repurpose those properties if there are any issues. The properties are primarily located in the United States with a relatively small portion in the UK, and then a few other properties throughout the rest of Europe. As far as why I personally like this investment, obviously the yield's pretty solid. This is typically a strong point of REITs just because in order to maintain their REIT structure, they have to distribute a large portion of their earnings. With any company that maintains a higher dividend yield, my main concern is related to the health of the company and its ability to continue to pay dividends in the future, and if that might be impaired. Realty Income Corporation seems to be pretty solid, and I don't really have any major concerns as of now. The company has a solid operating history with over 55 years of consecutive dividend payouts and 27 years of consecutive dividend payout increases. So you can see there we have 111 consecutive quarterly dividend increases. So every quarter they're increasing the dividend just because they are able to continue to grow the portfolio. They're keeping enough capital to just be able to reinvest and grow the portfolio. It's not like it's just staying static and you're really not getting any growth out of it. Now the payout ratio is roughly in the mid 70 percentage range of adjusted funds from operations, not net income. This adjusted funds from operations is a different measure the company uses because it's a REIT and the company also has non-cash expenses such as depreciation and amortization that are pretty significant in the scale of the business. This figure also adjusts for some one-time expenses and gains that are out of the ordinary. The payout ratio has stayed around that mid-high 70% range over the last several years. This adjusted funds from operations, this is a non-GAAP measure the company uses. I do like to keep an eye on the net income as well, though, just to make sure there's nothing too crazy going on there. If they are having some severe asset impairments or anything going on there. Despite turmoil in the real estate market, especially that retail sector, Realty Income Corporation has done a good job of keeping its properties occupied with a current occupancy of 98.5%, an occupancy that hasn't ever dipped below 96% at year end. This is one of the biggest issues I personally worry about looking at a large real estate company. They are heavily concentrated in that retail space, but given the broadness of the retail industry and the diversified tenant base, I'm not worried too much, and they seem to have a pretty good handle on the occupancy. Even during COVID, the company really didn't have too big of an issue. You can see occupancy did dip slightly, but they really just recovered, didn't have this drastic decrease in rents. They were able to keep their dividend payout still just increasing throughout that period, which is really good just because I do consider that COVID-19 pandemic area that to be one that really did stress a lot of businesses for that couple of year span. Now, the company has been able to steadily reinvest some capital and continue to grow its dividend each year, as well as it just has annual escalations in its leases, its lease income that it receives. However, because of the higher payout ratio and challenges in the real estate market, the dividend growth has stayed a little lower the last couple of years in that like 3, 4.5% range. Realty Income Corporation has historically funded growth and acquisition of new properties with some stock sales. So if we go and look at the number of shares outstanding, you are actually going to see that the number of shares outstanding is increasing year over year, quarter over quarter, most of the time. This is diluted, but not super uncommon for REITs. And since the acquisitions are income producing property, as long as the property acquisitions are attractive, this isn't too much of an issue, really. Interestingly enough, the company actually did approve a $2 billion share repurchase plan earlier this year, which, given the current interest rate environment and dividend yield, this provides the company to repurchase shares if it isn't able to find an attractive use of capital. So that could be interesting to see as well. Looking at the price of the stock over the last several years, you can see it hasn't really gone anywhere too crazy overall, but there's definitely been some ups and downs. But it's kind of just really traded sideways. The longer history, you can see the company has just grown a lot more consistently, and this just kind of is dependent on the interest rate environment, whether the company is able to find just good deals as far as improving its portfolio. I do expect kind of moderate, just lower growth. I mean, you can see that dividend growth where it's been that 3 to 4%. I expect kind of that. I expect the stock price will probably also do a similar thing. In the end, I did invest in Realty Income Corporation because of that high yield and solid performance of the company. I don't think we're really going to be worried too much about any massive value losses. I also don't expect the stock to really increase super drastically unless maybe we see a drop in interest rates. But really, any drastic price movement would also depend on other economic factors. I don't expect this to make me a ton of money in capital gains, but I don't really expect it to lose value. Thanks for watching. Let me know if there's any other stocks you like that I should check out.